All right, folks, we are live. So in this guide or this episode, I'm going to very quickly cover the great price points or possible entry points for you to start looking and buying at Ethereum. I have a lot of inquiries coming in from people who do not know, firstly, how to buy Ethereum or where to buy it, how to store it. They don't even know what is a wallet address, and at the same time, what is the price that I should be buying Ethereum? That is the main thing that they're asking, right? Is the current price too high, too low? So nobody knows. These people don't know. So I think this video is going to be very helpful for folks who are intending to buy a little bit of Ethereum for their portfolio. And I think it's going to be good for us to all kind of learn, or at least I kind of want to share what kind of time frames that I prefer using for my Fibonacci. At the same time, am I concerned about the overall moving averages? Do I look at the volume? I think all these things only matter if you're doing swing trading or perhaps so-called day trading. Scalping, I'm not a scalper, so I don't bother about the intra minute to the minutes, 1 minute, 5 minutes, 15 minutes. I don't trade these time frames, so it's not for me, right? But for me, I'm looking at what is the price support over a 3 months, 6 months to even 12 months time frame. I think that's so much easier for a lot of people to enter the market. And interestingly, it's so good to be able to kind of see that most times when you see the technical bounces, or when you see the prices of your particular crypto stay supported, or at least when it hits a resistance, it's pretty nice to know that it follows a certain trend. So here we go. Okay, right now, Ethereum is trading at $547. So if, let's say, for example, I did mention that whenever a particular peak is near, right, from a historic peak, you want to take note. And I think a lot of people don't have the access to these technical tools, or they do not know where exactly. So for now, for a very simple free one, you can check out TradingView, or you can check out Coinergy, right? These are the two. But I think TradingView is more extensive because it covers Forex, it covers mutual funds, it covers stocks, obviously, and it has a very wide range of asset classes. So I think it's pretty good. So I would rather you use Coinergy, but since I would rather you use TradingView. The other one is Coinergy, which only at the moment has cryptocurrencies, but at least they have quite an extensive range of cryptocurrencies. So another thing, right, that I want to highlight is I think people may not always necessarily know how to trade. So earning Ethereum is actually one of the ways that you can start building up your Ethereum stack by selling products or offering services, right, for Ethereum. I think that's a very, very good risk-free way. Other than you putting out the time, effort, and your skill, you are not risking money like I am, right? You're not putting in money into the market like myself, right? So I think that's a very good way. So offering your services and accepting Ethereum is a very smart way of building up your Ethereum stack. So yeah, just giving you guys a kind of food for thought if you want to build your Ethereum and you kind of don't really want to trade, right? But obviously you have to have your cold wallet, your hot wallet addresses ready so that your customers or clients could send them to you, right? Okay, so anyway, let's get to the technical aspect. So I personally feel that at the moment, Ethereum may have potentially may potentially be taking a break and may have a potential retracement. At this point, I'm looking at the $480 mark. Okay, I'm looking at the $480 mark as a good indicator whether we have a pullback. Now, to pull back all the way down to the 0.618 ratio, it's kind of far-fetched, but it's not impossible, right? Because all it takes is one whale willing to sell through the books for whatever reason. And I shouldn't say for whatever reason. The reason is that they already have a short position, a leverage short position, meaning that you're going to take advantage of the downward movement of a particular asset class. and then from then they are going to make money when the Ethereum goes down. Now, is that always the case? Not necessarily, but because when people truly want to sell or at least close off their position for the year, they don't have to go through an exchange. They can do it via OTC, which is over the counter, which doesn't reflect on any exchanges. Usually OTC, whenever they're buying and selling and providing liquidity, it's always off the charts, okay, or off the exchanges. Hence, it's called over the counter. So there is no real reason that Ethereum, to me, should sell down that drastically, unless, for example, there is some issue with the whole staking that is going on at the moment, right? Like somehow someone found some malicious code that could affect the whole staking environment. You know, stuff like that. It's not far-fetched, by the way. Crypto is like that, okay? So take note. At the same time, there could be potential wallet security issues, stuff like that, that could spook the market and spook people who are planning to stake. So take note, there are risks involved, but let's assume that everything is all hunky-dory and we only need to care about the short to mid-term volatility, because people are already interested. People are going to get their bonuses for the hard work that they've done throughout the year, and they probably want to buy some Ethereum. Bitcoin, to me, has already peaked. Hence, you see that today it touched 18,000, but somehow maintained support. But I just feel that it's a little bit weak on the buyer side. There's more sell side action happening and more selling pressure. So I'd rather focus our attention to Ethereum, since Ethereum is already starting 2.0 already. Okay, so long story short, let's get to it. So now $480 mark would be a very, very good point where I would start queuing to purchase Ethereum. I really feel that way. Okay, so what I've drawn here is a Fibonacci retracement from the beginning of June, okay, all the way until year to date. So when you are doing a Fibonacci, right, it's very, very simple, guys. Just take the bottom. Okay, look, technical analysis is usually from the bottom wick to the top of the topmost wick. But I kind of like to suss out the noise. You know what I mean? So what I try to do is that I look for consolidations. I love consolidations. Now, traders don't mind trading in consolidations provided there is volatility. I'm not very interested. I'm only interested in buying at the best price possible for the period. So I'm not concerned about the volatility. For example, if let's say we zoom in on this portion here, okay, it may seem very simple. On leverage, this movement can be relatively attractive for people who love to trade within the week, the month, or even per day. It's very attractive. It could be, especially on leverage. But I'm looking at accumulating. I'm not here to go and speculate. I don't mind swing trading, meaning that I can accumulate for, let's say, a good portion of this period. And when there is a nice price movement, I will take profit here, and of course, hopefully take profit anywhere along the way. So I am not I'm not here to speculate. I'm here to just swing trade. That means my trades are 1 week to even a few months long at a time. Now, can I always catch the peak? No, I'm not here to catch the peak. I'm here to catch whatever profit that I can get in the middle. So take note, it's a very different style of trading. It's more relaxed because I have 2 kids. I don't have time to keep looking at the market all the time. I can always be having someone call me, my kids to call me, and I need to move away. I am not here to look at the charts, neither am I here to refresh my screen over and over every 5 minutes. I'm not supposed to do that, or I don't want to do that. Okay, so for now, you're looking at, let's talk about the initial price consolidation with very low volume. Okay, so I hope you guys can see. Okay, so during this period, the June period, right, there was a very low lull period of lacking in terms of volume. Okay, it was very, very low, and you can see that. How do you tell? The candle bodies are very, very short. Okay, they're very, very short. They're very small. There's not much movement in a day. They can be buying and selling, obviously, but there's not much movement in a day. These are great times to start buying. Now, when it's time to sell, for example, right, it would all depend on how much volume. Now, Ethereum, you don't have to really worry so much because Ethereum is the second in terms of market cap. So you have more than enough volume and it can definitely accept large orders, right? Buying or selling large orders, no problem. Okay, so that's one thing good, right? Anything that's 20K, 100K, 50K, no problem. More or less, the orders will be filled relatively quickly. Whereas opposed to if you were trading an alternative coin that had a volume of less than 1 or 2 million, you would have a very tough time filling out your orders, and you most likely have to, set limit orders to separate the buy, right? The buying or the selling. So that way you don't disrupt or cause other bots that are on algorithm to kind of go against you and jump ahead of you just by 1 or 2 pips or bits. Okay, so that being said, okay, right now, if you ask me, I would personally love the 480 mark. Okay, oops, I kind of shifted. You see, that's the thing. I accidentally shifted the chart. Give me a second to readjust it. Okay, yeah. Okay, so I am looking at the 480. Sorry, this was supposed to be 480 and 430. Okay, this mark would be very crucial for me. Okay, because right now, as you can see, there's a lot of volatility. Okay, so the volatility that you see here is really good for those who love trading, going on leverage. But I don't do any of those because I feel that there is too much volatility and you could lose your stack. So you see, this is a total of a 18% move. Now let's be a little bit more conservative. You have 15%. 15% on a 50 to 60 billion market cap cryptocurrency is really not bad, right? So right now, this is the volatility. Now, whereas opposed to the volatility that I was talking about previously, yeah, as you can see, if you shorten it, I guess you can squeeze out 10%. Yeah. So it's about 9 to 11%. Not too bad, not too bad considering that if you are, say, a VIP account, your trading, your maker-taker fee is very, very low. I think 0.01% or maybe even lower than 0.01% per trade. Usually 0.025. But then again, that's really peanuts in comparison to what you could potentially make if you are looking at the larger movements. So as of now, if you look at just 6 months ago, Ethereum has already risen 186.52% in 6 months. Okay, that is really good. That's really, really good. That's very good returns on your money. Now, the question is, why are we buying Ethereum, right? So one, you're buying Ethereum because you are banking on the 15% to 16% when you decide to stake. Then the other alternative is that you just want to buy for the long-term growth. That means you're willing to hold past 5 years, 6, 7, 8, 9 years, okay? And you want to build a deep in the money position. Now, deep in the money position is so important because a lot of people, when they see the volatility in crypto, or sorry, not see, but they experience the loss when the volatility comes in, they panic. So instead of buying more, they are very fearful. They are very fearful that, okay, I'm losing too much money too quickly. I'm out. I quit. I realize my losses. So this, unfortunately, will be the lesson that a lot of people will have to learn, especially if they're stepping in completely fresh, completely new. They're gonna experience it for sure. Okay. So the only thing that I can say in this video is have a plan, have certain key price points that you would want to buy. Now, like I said, I know for a fact that a lot of exchanges don't provide you with the limit order buy or sell. Limit order basically means that you can queue. Unfortunately, it's always only market buy on Coinbase unless you open a Coinbase Pro account, which gives you the access to trading tools and also the availability for you to limit buy, limit sell, stop limit, so on and so forth. Okay, so folks who don't have all this, right, will only be susceptible to market buy. That means meaning that today I feel like buying, that is the price I pay. Okay, that is called market buy or market sell. That means I feel that, oh, it went up a little bit, I'm happy to take profit. That's the price. That's the price. They don't even know whether that's the potential price point that they should be selling at, is that the best price or whatever? They do not know. Okay, that is the part where, that's why I'm saying try to be the smart buyer or smart seller when the time comes. But for now, let's focus on buying. It's very, very simple. It's so much more straightforward. I think at the end of the day, you know what? When you're buying something, buying an asset or accumulating an asset, you always want to get the best price. That's why dollar cost averaging is a term that you need to learn. Dollar cost averaging just basically means that you are not really concerned about getting the lowest or the highest price points all the time. It doesn't affect you that much. You are buying a particular asset, in this case Ethereum, across a certain period of time. So usually at the end of the year, okay, since we already had such a great amount of bullishness, I would feel that the excitement would taper off. Okay, there will be most of the traders will be taking the year off. They're not intending to create any more excitement for the market. Everything is just going to be more slow. Okay, it's going to be slower. So what happens is that you're going to start looking at the volume, and it's not that fantastic. You're just going to see very simple market buy, market sell orders. Just it's like on automation. It's not organic, okay? So you're going to see that, right? So you're going to probably experience a consolidation at some point. So what's a consolidation? A consolidation just means that you have this kind of flat line looking kind of movement, okay? It's like the best time to accumulate, okay? These periods are the best, right? When you see all this, okay, you're really probably excited. Like, okay, like maybe if you didn't buy during this period of time because you were anticipating, okay, maybe there was a further drop down, but unfortunately the market started to go up. So the breakout is the part where you potentially could still capture a nice piece of the upward movement so that you can benefit and feel good about yourself that you bought before the price went to the next level, right? But right now, we have to accept the fact that the prices are only going to go higher. It's very rare and very unlikely with F 2.0 that you're going to see back to the $200 days or the $300 days. It's very, very unlikely because right now, the staking is such that it's a lock-in for 2 years. So whoever is kind of creating any other kind of volatility, that still can happen, by the way. I'm not saying that it's impossible. Is to kind of give people the opportunity to even buy in more or even cause people to liquidate their positions, and they can benefit from the shorting, as I mentioned earlier in this video. So I am going to be very straightforward. I'm going to share with you where are the best levels. So for now, okay, especially if you don't know how to put orders, if you're really very, very excited, I would still recommend 476 as the price point for you to start at least buying your first Ethereum, right? Now, will that change? Could that potentially change? Yes, it could. Now, if let's say this price range of, let's say, $536 to $632, this range really becomes a consolidation. That means you see the price literally going within this range, which is kind of unlikely. But let's assume that happens. Then you have to accept for the fact that $536 will be the better place to set your very first order. You have to be nimble. There's no hard and fast rule. There's no sure shot way of knowing where to buy all the time. Hence, when you have these tools, it is important for you to use them so at least you navigate the space. Okay. Also, 548, what does it mean? I think let's just put it this way. Whenever you're paying for something in the crypto market, firstly, to have a valuation on why is Ethereum worth $548, the only sure short answer is that because the market deems it so. Okay? Because the market deems it so, that is the price that people are willing to pay. That is what you have to pay. It's just the way it is, okay? There's no real answer like, oh, because there's X amount of addresses, because this hedge fund is buying up. Okay, potentially, if you see a large amount of money coming in from a particular hedge fund, private office, or family office that, of course, makes it known to the public that they bought X amount at this price, it's always intentional. Okay, so for example, MicroStrategy, I think, wants to raise another $400 million to buy Bitcoin. Now, think of it this way. They are raising money, okay, because they know that the capital at risk is going to be practically not theirs, okay? And at the same time, anyone who's coming in, right, willing to buy Bitcoin is buying at the current prices. They bought obviously probably cheaper, right? Maybe at 10,000 or so. They are already at least 80% in the money. This is a decently deep in the money position for their previous positions, but because you have to follow the market price, you can't say that, hey, I want to buy I want to buy Bitcoin 6 months ago, all right, or I want to buy the Bitcoin at $3,000 or $4,000. It's not gonna happen. You just have to suck it up and move on, or you completely stay out of the market if you feel that the price is not ideal or favorable. You can always do that. You have a choice. Hence, that's why I mentioned don't be too excited when you see videos. That's why I kind of always put my videos in a kind of relatively monotone kind of way and try to speak sense to people, because I think when people get excited, right, they buy from an emotional standpoint and not from a logical standpoint, and that's what I don't want people to do. At least when you kind of share this kind of piece of information with people and people do take that advice, the thank yous are just better, right? People will thank you that, hey man, you made me think a little bit clearer compared to everyone else asking me to buy at whatever price. Yes, you can buy at whatever price. At the end of the day, it is your money, but I would rather you learn to be the smart buyer. You don't have to be a hedge fund or you don't have to have a private banking account to be smarter. It's not necessarily true. You just have to be a bit more savvy compared to your next door neighbor or the auntie across the road. And yeah, I think it's okay, because like I said, Ethereum is still at the stage, or crypto is still at the stage where the retail market still can step foot into it. Okay, it's not a pure whale only kind of community. Sure, I think Bitcoin already has come to that point where a lot of the larger like Grayscale, right? Grayscale investment trusts, they are already buying large amounts of Bitcoin. They are claiming that whatever price that people dump, they are buying. Okay, but Ethereum is still far away from the all-time high. So let me tell you about the potential now. Now, this potential is always not an indicative. So past performance is not an indicative of future returns. So take note. Okay, if Bitcoin can go back up or at least touch its all-time high, okay, Ethereum, its all-time high was 1,400 or 1,392, depending on where you're looking at. So this is the price appreciation that you could potentially enjoy. So this is the part where you need to observe. Okay, give me a second, guys. My baby is crying. Haley, what is it, man? Aha, well, as you can see, guys, sorry that I have to move away. The show ended on the other end. Okay, where was I? So as I was saying, okay, I think at the moment the price growth is there. There's a price history to where Ethereum used to be, and the likelihood of Ethereum doing its all-time high is very likely, because right now you're having more people starting to be able to step back in. So Bitcoin is all Bitcoin mining, proof of work. Now, Ethereum is proof of stake, where you just have to have a server that is willing to run 24/7 and you can start earning Ethereum. Now, people who are earning Ethereum, okay, the more likely than not, they're gonna be at least dumping back into the market. So you're gonna see volatility, and the price is going to stay relatively stable for a good period of time. So don't expect the sudden surge of Ethereum. You're going to see a gradual price growth as more and more people are aware of what's happening in Ethereum, what happens in Ethereum 2.0, or how much interest they can earn from staking Ethereum. 15%, right, is the so-called current APY, or annual percentage yield. Okay, this annual percentage yield is what you're going to be getting for the 32 or more Ethereum that you intend to stake. So that's very attractive. So you're getting everything back in Ethereum. Obviously, you have the the full ability to sell off into the market because you want to reduce your overall capital risk. So 32 Ethereum at this current price point based on 547, your capital outlay is 17,504. Assuming that your percentage yield or APY is 15%, that's $2,625. Okay, so if you are getting this amount yearly, you have the choice of you actually just selling it off in the market, which this case, okay, if 2625 remains consistent, which I kind of doubt that it will remain consistent, but let's assume that it remains consistent, your total outlay as of just now when I mentioned was 17,000. Again, wait, let me see, 32 times 550. Okay, so 550 divided by 2625, right? It'll take you about 6.7 years to break even just on the APY alone. Okay, so that's not too bad, right? It's not long term. It's considered medium term. Okay, it's not long term, and this is just by staking Ethereum. That means you do not have to trade, and at the same time, you're not going to pay any because you're holding, right? But you definitely probably have to pay taxes when you cash out on your 2,625, your APY portion. So take note on that. But other than that, I think it sounds pretty good. And this APY, right, that you can obviously either build nodes, right? Like if you have more than a few nodes running, okay, let's say you are willing to throw in 100 grand, okay, $1 million, right? You can start building more and more nodes and start literally churning out lots of passive income. I think this is very, very powerful. And a lot of people have been trying to do that. At this point of time, I think a lot of investments in the market cannot even give you 15%. Okay, it's not, it's just not there. Mutual funds, real estate investment trusts, bonds. I don't think you want to do any kind of high yield investment bonds, or they call them junk bonds, right? That are usually less than triple B or less than triple C. I can't really remember. See, I'm a bit rusty. So anyway, those usually provide a very good, attractive yield because these are from corporate companies, right? But right now, if you're willing to stake Ethereum, and Ethereum is one of these, it's in fact the second largest cryptocurrency, and a lot of companies are holding Ethereum. And when I say a lot of companies are holding Ethereum, you're talking about Coinbase, you're talking about Huobi, you're talking about Binance, you're talking about Grayscale. No, I don't think Grayscale has Ethereum. The last I checked, maybe they did or they didn't. Then of course, I'm sure that the larger companies that have not made themselves known are holding Ethereum in their portfolio. It's always Bitcoin, Ethereum, and some other stuff, right? So just take note, if you don't know anything, just buy Ethereum. If you don't know anything and you want to be extra careful, buy Bitcoin. But your price appreciation for Bitcoin is going to be very slow now because Bitcoin has already peaked. So it will take some time before you can even, double up your money. Okay, for example, because doubling up, that means your Bitcoin is going to 36,000 as of today. Right? Not impossible, but I'm just saying that it'll probably take a bit longer because it took us since 2018 until now. So 2018, 2019, 2020, it took us 3 years to regain back the current price. So don't expect Bitcoin to suddenly surge because staking Ethereum or providing liquidity for Bitcoin is not as attractive. In fact, it's more attractive to provide liquidity in USDT, which gives 10%, whereas the overall market rate for lending Bitcoin is only 6%. A large part of people who trade are trading in USDT, okay, a stable coin, right? So hence the requirement for USDT is higher. Ethereum will probably fall in that category as well, not giving too much on the exchanges. It will be, in fact, maybe potentially better unless suddenly there's a sudden surge. There's so many people having Ethereum that the Ethereum pairs for altcoins start picking up. So not to confuse everybody, but yes, you can also trade into high volatility or highly speculative altcoins and take profit in Ethereum or Bitcoin, which a lot of people have been doing, even myself. Okay, so these are things that I have shared. I hope you enjoyed the episode. Give it a like if you learned something. If not, just give it a thumbs down. And of course, if you have folks who are interested in buying Ethereum, feel free to share this video, and I think that this will be relatively helpful for them. Take care, guys. Stay safe out there, and don't forget to like, comment, and subscribe in the channel. See ya.